Welcome out to Tackle Train's halftime report for December 1st, first day of the month. We got some price action, trying to find a little bit of support here today. We're going to get into that with Coach Tyler from a technical perspective. But before we do so, pleasantries, let me bring in Coach Mark. Coach Tyler, first and foremost, Coach Tyler, how you doing today?
Listen, it's an up day. Tomorrow probably going to be a big down day. But we'll take a win. We'll take the W. I like today better.
Take the W where you get it there, my friend. Coach Mark, how you doing today?
Well, if Tyler is first and foremost, that makes me second. And
first and foremost was pleasantries to the group.
First and foremost, let's talk to Tyler. That means I'm second and afterthought, which is okay. Every woman in my entire life has treated me that way, so why should you be any different?
Listen, par for the course, my friend. All right, let's and very quickly, guys. Later on tonight, Coach Tyler will be taking on Coach Frank in another edition of Trade Master. So get ready for that. We also have a webinar on Tackle Trading 101 on introductory to covered calls next Monday night on our YouTube channel. So get prepared for that as well. But let's get into the topics of today. There's a couple updates I want to get from Coach Mark very quickly before we get into the price action, as we're going to focus on for the most part here today with Coach Tyler, getting his technical read in the market to see if it kind of is fairly similar to mine. Mark, very quickly though, we've had some major, I don't want to say major news, but we've had major events over the course of the last couple days, right? Chairman Powell on the Hill. First and foremost, I'm not even going to start with Omicron. I'm going to start with this. Chairman Powell wants to retire the word transitory. Mark, what do you have to say about that?
I believe his retiring of the word is transitory in and of itself, because he'll bring it back at some point,
Mark,
in reference.
I've been reading a lot today about the hot takes of the word transitory and how the Fed is pivoting to more a hawkish tone. I got a simple question. Is Powell the last one in the world to still believe in the word transitory as it relates to inflation?
No, all of the media financial individuals,
they're still there.
The right headlines that were just basically, if he says it's transitory, is it transitory? I mean, the people that don't put any thought, anybody that's put any thought.
I think he's just catching up to where everybody else in the market is on transitory.
Anyone that actually has put in any thought has been very, very, come on.
Yeah. Like this word transitory, and all of a sudden the media is like, oh my goodness, this hawkish tone, and the market's up on the day. And I'm like, that's because the market has already, let me put it like this. From the very second he used that word transitory, Mark, I was in the halftime report and I remember saying that was nonsense. Okay. That was over a year ago.
Yeah, we made so many jokes in the last 6 months, is like, life.
We're not abnormal in that, Junkie. We're not abnormal in that.
That's how comical it's been.
Yeah.
But he acknowledged that, and and him suggesting that there might be faster tapering rattled the markets a little bit. I think it's still continuing to rattle the underbelly, because the underbelly is like high growth, right? High growth stocks where interest rates can actually do impact. Potentially, because these companies are borrowing a lot of money, right?
Yeah.
In their high growth stage. I mean, you see ARC down today again, underbelly generally getting hit today pretty decently, not participating in the rally at all. So I think there was
but that's not abnormal lately either, though. That's again par for the course. Markets up, underbelly down. That's not exactly surprising news. I got a very simple take on this one. Very simple take. The market is in a sell now, think later mode. And I said it last Friday when the initial news came out. Market initially sells, let's think about it later. And what I mean by that is when this news comes to the market, they have this immediate take, this immediate hot take, right? Everything's radical, everything's crazy, everything's quick, everything's volatile. And then a day later, they're like, wait a second. Maybe Omicron isn't going to shut down the global economic recovery. Okay. And maybe it's not, because it's not as terrible as those initial headlines represented it to be. And maybe Powell removing the word transitory isn't necessarily as negative as the market initially heard. given the fact that Powell had talked about this literally 3 weeks ago when he was in the latest monetary policy statement, when he literally said that transitory is not the language any longer, and he talked about 3 weeks ago about how how they could absolutely speeden up the pace, or they could slow down the pace of the tapering. And so what I mean by the sell now, think later is the headline comes out and it sparks this initial emotion, right? Oh my goodness, Delta, COVID. Oh my goodness, that negativity, right? Oh, we're removing transitory. Oh, that's really hawkish. Is it though? And as market participants, we take a moment to digest the news and we realize, wait a second, we've been here before. We've had these conversations before. We now have a little bit more information, and maybe removing the word transitory in an environment where inflation is above 5 and 6%, maybe that's not again, you give a little bit of time and you understand that it's not as negative as those initial headlines suggested, is all I'm trying to say. And so we're in this moment, this pocket of time where technically it's going to be very volatile, in my opinion. And Tyler, you said it best. I said it yesterday. Get ready for the up and down nature of the marketplace. As we navigate these news-driven markets, it's going to take a little bit of time before we see some consistency. But I said this yesterday and I still maintain it. And I said it the day before, and I said it the day before as well. If you see a trade, you still take a trade. I don't think we're in the environment of sell everything, guys.
No.
I think you're in the environment of this weird pocket where the market's trying to find a rotation. It's trying to find a theme it can attach it to, and it's simply not there yet. It's simply not there yet, but we could get there fairly quickly. Next thing I wanted to get your take on, and let's go to the energy market very quickly. Coach Mark, let's take a look at crude oil here. Mark, OPEC is meeting here today, and as we've discussed for the last couple days, the plan is to maintain their 400,000 barrel output that was discussed many months ago. Right now, they're not even meeting that 400,000 barrel output. Right now, they can't even meet the supply demand, and so they're not even meeting that. It does look like they are in maintenance mode here, Mark. They're not looking to increase. They're not looking to decrease. It looks like they're in maintenance mode. How does that, and again, we haven't got confirmation on that. That's just what we've heard from Vladimir Putin out of Russia. We've heard from Saudi Arabia on this as well. It doesn't look like the data is there to make any substantial changes in their output levels currently. What's your take on that as oil tries to find some modicum of support here?
Well, it'll be interesting to see, and I'm waiting for the final decision because I still would not be surprised if they cut back that 400,000. It wouldn't surprise me. But let's say they do status quo.
And again, Chucky, they're not even meeting the 400,000 right now. I think I read a stat. They're around 250, 240,000 barrel output right now. And again, that's based on their increase, right? And so I'm sorry to cut you off, Chucky. I just want to get
and there was a Goldman analyst, when you talk about the price action, and when you hear Matt, because Matt, you and I both have said this week, we think oil is a fundamental buy here based on fundamentals of supply and demand. I thought the Goldman analyst, I can't remember his name off the top of my head, but it was almost sarcastic. He was like, the markets right now are basically pricing in for oil that there will be zero flights for 3 months, a basic complete shutdown of travel for 3 months, based on the oil supply demand. There's certainly some worst case scenario popped into the oil market here. Now, on the Omicron front, so let's say OPEC stays the course, 400,000. It's all going to be about headlines on Omicron then for oil in the short term, battling out on the headlines. And what we know, we still don't know a whole lot on Omicron right now. What we do know, the World Health Organization came out in the last 24 hours and said, according to its initial study, there is no indication that Omicron is more severe or at all than other variants. That lines up with a lot of the anecdotal evidence we've seen out of South Africa, where the cases have shown to be very, very mild. If that continues to go by itself, huge thing. Of course, we have the vaccines.
Well, and I did read very quickly, Chuckley, on the vaccines that there's chatter that the vaccines may not provide immunity to the variant, but it does prevent severe illness.
Now say that again.
It doesn't provide the immunity to the variant, the Omicron variant, the same way it did to Delta and the same way it does to COVID, but it does prevent against severe illness, is what I read.
Yeah, I mean, there's three types of catalysts that can impact Omicron and oil, and then hence other areas of the market as well, right?
Mm-hmm.
So the severity, I mean, if it's shown to not be severe, this is not going to have.
I think we're good. I think we're good there in the market.
I think this becomes a nothing burger really, really quick.
I do too.
The second is vaccine efficacy. Early data is actually encouraging. We'll know more in a couple weeks. But every day we get past the Moderna CEOs, the vaccines aren't going to.
I think you would like a second go at that statement.
It just was so. Anyways, listen. Don't scare the world unless you have the data. Be a scientist.
Unless you need to.
You're head of a pharmaceutical company, for crying out loud.
A pharmaceutical company that is providing one of the vaccines. Your words matter.
Seriously, act like it.
Your words matter.
So vaccine headlines, whether it works or not, the efficacy of that. And then government actions. The Biden administration tomorrow is coming out with their Omicron plan, supposedly, on what they're going to do. Australia has already came out and said, we're not locking down again. And the prime minister was very and I think he summed up the attitudes of billions of people. He's like, no, we're not doing it again. And Australia's been very
they're very conservative.
They've been very careful, err on the side of caution. They're like, we just can't go through this again.
Yeah.
And so if you have got countries like Australia already saying no lockdowns, restrictions in a few countries, South Korea, Japan, Israel, for a couple weeks, just being extra careful. But if the Biden administration, Europe, Australia, if you see Western democracies come out and say, we're not locking down, I don't know how you don't have an oil bounce here.
I agree.
And if you get that coupled with an OPEC cut potentially, I really don't know how you don't get an oil bounce.
Well, and that's why I think when you and I were talking about it, when we said the language of fundamental buying, I think that's we're seeing this whole situation the last week in oil is a little bit of an overreaction to the news cycle. Would you agree with that?
Yes.
The price action was very volatile.
100%.
Right. And that's why I think when you hear a trader talk about a fundamental buy, they see that as an opportunity. Maybe it's against an overreaction to volatility, or maybe it's a technical event, but they see it as a long-term opportunity to pick up a quality financial asset that they believe in that has price appreciation in front of it.
I don't think $67 is the top of oil.
I don't either. But it also might not be the bottom of oil either.
Not in this. I mean, because we have so many.
Let me just finish my thought on that one really quickly, Chucky, because it's not just OPEC and Omicron that is really kind of driving oil. Remember, the volatility in oil started a little bit with the release of those strategic reserves, and then you started seeing other countries also release strategic reserves. And the Biden administration literally today said they are willing to release more of the United States strategic oil reserves as a way to combat this inflationary environment. I'm not sure they'll have that same take on it if oil stabilizes around 65. I think that's a warning that if oil gets up a little higher and higher and higher, they're willing to do it again. That might put a top in the short term in oil as well. We'll have to see that. All I'm saying is there's competing headlines and analysis that is kind of driving the price action right now. Fundamentally, I agree with you, Chucky, 100%. I feel like there's an overreaction to the headlines in the oil market from both a strategic reserve perspective as well as an OPEC perspective, and definitely from an Omicron perspective as well. That's why I agree with you that I do see this as a fundamental buy. But I also believe that it is vitally important that you rely on your technical skill set. And I want to bring in Coach Tyler very quickly. Coach Tyler, from a technical perspective, and Coach Mark, thank you so much for coming on to the halftime report today.
You guys have a good show.
Love
I'll
it when
see
you
you,
come
Listen, I'll
on
be
to give
back
us those
tomorrow with
updates.
another edition of How the Omicron Turns.
I
So
love that. Give us that Omicron update every day.
have a good show,
Tyler,
everyone.
thank you, bro. Tyler, technically here, we're seeing a very similar volatility, right, over the last 4 trading days. Big down day, it tests up, comes right back down. A little bit of wickety wick nonsense. Tyler, can you give me your technical read right now? And can you also look at those major support levels there, major support levels where oil could find a floor?
Yeah, risk assets right now, the correlation's pretty high among them. And so you're seeing the action in oil. It's a little bit more dramatic than the S&P, obviously, but
Yeah.
but in terms of the seesaw, it's it's mirroring the S&P 500 here. So the analogy I used in my trading lab was, we're just watching a toddler throw a tantrum here, and we're all just trying to be patient and wait for him to exhaust himself, right? And sometimes he cries for a long time. It's like, dude, let it out, man, let it out. You are seeing the market adjust to this new normal, this new reality, and sometimes it takes a little bit of time. But the trend is down, and as a result, rallies are suspect. And so that's what's hard about a day like today, both in oil and the S&P, is you get excited, you see the market gap up, but it's like, we're not gapping to all-time highs, we're gapping into overhead resistance, and so it's suspect. So I think it needs time. But as far as which levels matter, keep in mind too that playing the support resistance game, what are the key levels? Volatility exacerbates the moves. You get whipsaw. It's a little bit harder to have a ton of confidence in, hey, if this line gets broken, we're screwed. Sometimes it breaks the line and goes right back up. So just keep in mind that you get a lot of volatility both directions.
Can I just add to that very quickly, Tyler?
Yeah.
Technically, when you see an increase in volatility, one thing you got to understand about support, right? Because I'll tell you right now, I'll label support a number all day long. Support's at 65, secondary at 62.5, right? I'll label it all the time. But you got to understand, support is a zone and not a finite number, right?
Yeah.
And in times of increasing volatility, you will increase the zone of that support as well, because and how I personally categorize it, guys, and this is not a industry standard. This is just how I personally have felt about the zone of support in my career. I really look at the ATR and I try to understand how that zone is about 1 ATR wide. And so when you're looking at the ATR with an increasing volatility, obviously increasing volatility is going to increase that range of the candles every day. As that range of the candles increase, the ATR increases. As the ATR increases, so does the zone of support increase as well.
Yeah. And
so that's how I personally see that. And so if you're looking at 65, the zone around 65 is really kind of in that 63.75 to 66.25 zone. It's really a zone, and as that volatility expands, so does the zone expand. So you give it a number, but you also understand that number is drawn in a big, thick marker that represents the zone of support. And with this increasing volatility, I mean, you got to first of all, you say 65, right? But you don't just buy at 65. You wait for that knife to drop, hit the floor, and then you pick it up after a reversal. So you're looking at 65. Under 65, where do you see any major support at?
Well, to your earlier comment, 60,
61.5,
61.5 actually looks pretty good. Yeah. Well, and the thing with a commodity too is, based on all your analysis with Mark, if you believe it's a buy at some point anyways, it's not going to zero. You like it the lower it goes. It's just a matter of waiting to see where everybody else decides to jump in and play, whether it's 65 or 60 or 55.
Yeah.
The lower it goes, the more you like it.
I agree with that, but I do think it's very important to wait on the volatility to subside a little bit. I think it's important. Yeah. And as we get a little bit further away from OPEC meeting and the Omicron situation that's been going on in the market over the last 3-4 trading days, as we move further into the December trading month, and you start getting focused on other economic factors, other earnings factors, other things that are impacting the market, you might see that volatility subside a little bit here in the oil market as well. Stay tuned as we navigate oil every day in the halftime report. Let's come back to the S&P 500, Tyler. We've talked a little bit about the S&P, brought Mark on to give us kind of the headline news out there in the marketplace. Let's focus here technically for a second, Tyler. I want you to give me a rundown from all the indexes very quickly. S&P, Dow Jones, NASDAQ. Give me the Russell 2000 and that failed pivot, even that one as well, Tyler. Give me that breakdown against the market.
Well, look, I think you've got some symmetry here, some consistency among the volatility. What I think makes this challenging, and the reason I'm using SPY instead of the futures chart, is because the experience of someone who is only here when the market's open, it's not really reflected in ES, because a lot of this is happening after hours, right? And so what you discover is
most of it is actually.
Most of it is going on after hours, which is what makes this so challenging, because it's like, I don't know, we're going to be down 2% at the open tomorrow.
A lot of it happens when you're sleeping.
Yeah. But so if you look at the last two bounce attempts, they both ended up being dojis. And I don't want to pass judgment yet on today, but look, so far,
it looks like it's going to finish a doji. We'll wait till that close, right? We'll wait till that close, but yeah,
which is not all that convincing. I mean, it essentially means all the gains that you had today were overnight. So it's like your portfolio profitability today was probably the highest right at the open, right? Mm-hmm. And you want to see the market build on that, right? It's good. I'm happy I'm up today, but I want to see more. And it almost just shows you that the rally is not ready for prime time, right?
It's got to break something. I mean, this, to me, the market is about finding support here. Anytime market volatility happens, it's always about finding where that support is going to land, right? Mm-hmm. Where's the market building on support? But I've said this many, many, many times. It's one thing to build support. It's another thing to break out of resistance. For the market to truly get cooking again, you can't just bounce on an overnight with very low volume that is driven mostly through just algorithms on the overnight action. You got to break something. You got to have that cash open, destroy something, see the momentum, and quite frankly, have that bear stop out day that Coach Frank just absolutely adores, right? Where it destroys the bearish hope out there. And so we just haven't seen that yet. You've been dealing in that up and down nature of the market. Tyler, 1 point on volume. In the last 4 trading days, we've had 2 big down, 2 up days, right? The volume pattern is a little concerning to me, that on the 2 down days, the volume was fairly enormous. And on the 2 big up days that, quite frankly, there were 2 just all sell days, and the 2 buy days we didn't exactly finish at the very top here. Yeah. Volume has not supported the buyer to the same way as supported the seller here. How does volume play a role in your analysis as we navigate the volatility of the market right now?
Yeah, well, to your point, I mean, volume confirms trend. And so you want to see high volume in the direction of the trend. So right now you're seeing high volume as we go down, not up, which confirms that there is more aggression by sellers right now than buyers. And you want to see that reverse. So if you've ever read How to Make Money in Stocks by William O'Neill, they talk about this concept of a follow-through day. Basically, it's after the market pivots, like a pivot low, maybe 3 to 7 days after that, you get a high volume up day as a follow-through day, right? Mm-hmm. Oversold bounce is nice, but I need indication that institutions are coming back into the fray. And so you're specifically looking for an above average volume day with a large up day. Ideally, if it breaks resistance, even better. But you're just too early in the process right now to really see that.
I agree.
And so for today, good, not great. And here's the thing, all your gains came overnight anyways. It's like, do you want to chase the up gap? I think from a sentiment perspective, what you really want is you want people to fear missing out on the upside. Once you see like FOMO come in and buyers start to chase it to the upside, that gives you more confidence. It seems like right now you have bag holders that are just thankful to get out at less of a loss, and they're selling into the strength. And until that changes, it's hard to have confidence in the sustainability of a rebound.
I agree with that, Ty. Regarding the NASDAQ here, if we'll switch to the NQ contract and talk a little bit about tech here. Over the last few trading days, we've been hearing with Jay Powell kind of removing the transitory language, also talking about speeding up the tapering process and still projecting 1 to 2 interest rate hikes next year. The hawkish tone that the Fed is, and again, I laugh as I say hawkish tone, guys. 0.25 interest rate to 0.5 is not exactly hawkish historically, but I digest. We don't need to get on a soapbox there. But I've been reading a lot of headlines and a lot of stories about the death of tech in a hawkish environment for the central bank. I'm not seeing that in these charts, Tyler. In fact, unlike the S&P, unlike the Dow Jones, unlike the Russell 2000, even in an increasingly hawkish tone of the central bank, the NASDAQ has yet to break a support level. What's your read technically on the NASDAQ?
Well, I wonder in regards to tech, if you have to get more granular and you have to say it's not the death of mega caps like Apple and Microsoft and Google and Amazon, which
or anything in the semiconductor space.
Or anything in the semis, which is interesting, right?
Or any of the semiconductors, which makes up a large portion of technology.
But some of those high multiple, high growth stocks that are in the tech space that maybe got a little ahead of themselves were fine when rates were zero. But maybe those are the ones where you're getting the pricing adjustment.
So in the companies that weren't good before the pandemic and we just built them up into mega market cap company. Okay.
Yeah. Shocker, right?
I'm surprised.
The companies that were the most detached from their underlying fundamentals, relying on future profits. When you start to discount those future profits at higher,
I wouldn't call that the death of tech, though. You know what I mean?
No, and they painted with too broad a brush. Whoever would say that, but look, sometimes we do use. I
use granular language as well, so I get it. I get it.
Yeah.
Technically here, though, we have not broken a support level, and I'm looking at a pretty clean resistance level as well. Tyler, can you give me a read on the intraday resistance level, where we're looking at the market from a resistance perspective, and where we can see a little bit more consistent price action? Because if this market does click here, it feels like it's going to click a little quicker on the NASDAQ than some of the other indexes.
Well, I would agree. And if you believe that strength begets strength, then this is certainly the area that's flexing the muscles right now. You can see, even though the posture of the candles is a little different, this is still mirroring the S&P, where you're seeing
the last 4 days,
big up, big down, big up. But it's not making lower lows, which is the compelling thing. It's just seesawing back and forth. So I know where you're going with this. Look, it's pretty darn obvious where this thing needs to break above, and that is the high of the last 4, 5, 6 bars, which on an intraday chart is pretty dang clean. Call it 16,450 maybe. But
I like that 16,450.
Yeah, 16,450. But what it tells you is it's not game time until we take that out. Like, great, boys, you gave me a nice little bounce, but what else? What else you got? Like, we haven't broken the range. Give me something new. And look, I mean, maybe we should stop talking, Matt. The longer we're talking, the more it's rolling over. But
listen, it's stuck in a range, and as long as it holds that range, and it's a 400-point range, so it can go anywhere from 16,450 all the way down to 16,000. Yeah. And so it can maneuver within that range quite aggressively, and you really shouldn't, in my opinion, as it navigates that 400-point range between 16,000 and 16,500, I don't think anybody should have a take on it. I really don't. Yeah. I think the only time we traders should have a take is when it breaks the pattern. And until it breaks the pattern, it's just like, it's like, I see this, Tyler, as it's a cup and handle. It's a high base. It's any continuation pattern. You're not trading within the pattern, right? You're not being aggressive within the pattern. You be aggressive when it breaks the pattern.
The turning points,
right? And so you just kind of be patient and wait for that to break out. And when it does, boom, 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 you got to love it, especially Apple. Oh my goodness. Apple is just going gangbuster here. Just going gangbuster. Gotta love that one. Talked about that one in the mastermind group from a couple days ago as well. Looking at Apple, it was obviously on one of our reports. What about the Dow Jones here? Little bit of a different picture here. NASDAQ showing a little bit of strength. S&P kind of, it's like Goldilocks here. You got hot, you got cold, and you got a little bit of lukewarm. The hot, still NASDAQ. It's holding its strength. The cold, a little bit here in the Russell 2000 and the Dow Jones. Lukewarm is the S&P 500 right now. Dow Jones fighting a very important test against the 200-day moving average. Tyler, give me your technical read.
Yeah, look, that's where it landed last correction. So, hate to sound like a broken record, but I like their green bar. You need to take out some of these resistance zones. I like the high of the last 2 days, 35,200. But this bounce was weak relative to what we've seen elsewhere. So it's a little bit concerning, and it just makes you want to lighten up into strength versus chase the strength. I think this just reaffirms that.
I agree with that. And finally, lastly, but certainly not least, the Russell 2000 here. What's your read on it?
Dude, let me use the ETF on this one. So this bounced the most this morning. You're seeing more beta, more volatility in this guy. These stocks and sectors are a little more sensitive to what's going on with Omicron and such. But do you like this candle? I don't like this candle.
I mean, I don't like anything about it. No.
There's nothing. They puked it up, and this is the problem with getting excited. This was up like 2.5% earlier today. The bounces are just not sustained, and they're selling this into strength. Until that changes, you just buckle up, expect more volatile moves, and resist the urge to chase. Like, it's just not giving you a reason to chase strength.
I agree. It's kind of a stay away from a directional perspective until you see a little bit of a better pattern. Tyler, Russell 2000, we don't even need to talk about the levels here. We know those levels so well. 2100 on the actual index, 210 on the ETF. We've seen this song and dance with the Russell 2000. It can maintain neutrality for a very long time. Is that kind of where you're back to with the Russell 2000? Is it's back within the range of that 2100 by 2300, and until it breaks that range, we're still looking at neutrality?
Yeah, I mean, basically that lovely breakout just ended up being
a lovely breakout without anything. Yes.
Yeah, and in fairness, I mean, it gave you some gains, but do you want to see a break of a range and then you come back into the range? No. So I share anybody's disappointment in terms of this coming back into the range. But yeah, it's almost like, okay, back to the coal mines, man. Tough slog here. Let's see how she goes. But all of that bullishness, all of that directional goodness, it's on the back burner now, man. I mean, it reset the whole setup, so you're just back to choppy sideways.
I agree with that, and honestly, until we see some degree of stabilization, some degree of break, I think we're just stuck in neutrality here in the Russell 2000. I think the opportunity, if you're looking at a little bit of dip mechanics, the Dow Jones setting on the 200-day moving average does have some interest. If you're looking at strength, the NASDAQ on the breakout has some interest, and the S&P can recover itself fairly quickly. But again, we're just stuck in, the entire indexes are stuck in that volatility cycle of up, down, up, down, up, down. We don't have consistent price action. We don't have consistent volume patterns. It's a difficult market from a broad market perspective, but that's going to be the case when you're going through some headlines and some news-driven markets. Again, I've been given the analogy of it's a flood, the dam broke. We haven't seen the true damage yet because the water hasn't subsided. That water subsides as volatility subsides. We have not yet seen that. Stay with us when we do see that. Let's take a look at the commodity market very quickly. Talked about crude oil earlier today. Let's move on to gold here /GC. Gold's been going through its own interesting battle over the course of the last week or so as it's navigating that very choppy 200-day moving average. A lot of wickety-wick nonsense here. Tyler, what's your technical read?
Oh, yeah. Look,
if you just want to say gross, it's okay.
Those
wicks are disgusting.
I don't feel bad. I feel like, dude, gold bugs gotta hate life right now. You had this perfect storm and it's just doing nothing. Look, it's a nothing burger. You would have hoped that this would have maybe seen some signs of life. Anytime the market sells off and you're like, hey, risk assets, they don't like them. Or am I going to get any kind of flight to safety or any kind of bid in gold? Not this time. Sorry, Charlie. I mean, it's just got no umph. I don't know what it's going to take to get it there, but the chart does not look inspiring. And even that bar on the 26th, right, when this popped on Friday, right, when the Omicron news initially came out, even then, couldn't hold it. It's like, yeah.
Well, and Tyler, that's the telltale sign, right? Because I've talked to a lot of gold bugs out there. I know a lot of gold bugs out there, and I'll tell you, gold bugs get a little frustrated when gold doesn't move on inflation. Yeah. Because in the back of their mind, the reason they're buying gold, even as a digital asset, is to protect against inflation. Mm-hmm. It's not a protect against inflation in the digital world. It's just not. Gold moves the most aggressive on negative economic events. It's seen primarily as a safe haven. And on that news day, when Omicron came and the market broke and everything got volatile, gold initially behaved exactly how you would have expected it to behave. Big up. But while the market stayed down, gold came back down. And that's a complete rejection, technically, in my opinion. A complete rejection, technically. And so you got it until this shifts a little bit. I think gold's in that stay away environment. Agree or disagree?
No, I agree. And it almost is like, well, gee, you're not paying me dividends while I'm waiting. There's no cash flow generated.
No, that's why we like the miners.
Yeah, at least you can do something with them.
Yeah, you can write covered calls, you get paid the dividend. That's why you like the miners.
Right. So I feel like these days the best, and this is hindsight, I don't know, who knows what'll happen over the next year, but it's like, look, if I were to make the case for holding gold the last year, how about just some stability? It's just more stable. It reduced the volatility of my overall stock portfolio by having some gold. That's about the best I could say about it. I mean, that's about the best.
Here's one thing you'll never say about gold. You're never going to say gold had a Zoom moment where it went from 500 to 200, right? That's never going to happen. It's a slow moving beast, and that's one thing you really do like about gold. Yep. Let's take a quick peek at copper here /HG. We don't look at copper on a daily basis, but copper has held up a little bit against oil. Again, when you're looking at the commodity market, copper and oil are very economically sensitive. When the economy struggles, when the global economy is there's some concern about that, these two financial instruments will take it on the chin a little bit. And on the flip side, when things get cooking out there, they get cooking as well. Copper has held up in the face of the volatility a little bit better than oil has, as oil's violated everything. Copper still has not been able to find its legs in terms of any bullish analysis, though. What is your read in the copper market? Where's support? Is the price action concerning to you? Just give me your technical read.
Yeah, I think last time we looked at copper was on this breakdown here. Mm-hmm. And I'm gonna echo what we said then. I feel like we've had many moments in copper over the year where it's looked ugly, and it really just hasn't paid to press your bets as a bear when this looks ugly. It's just been more choppy than anything. So look, it's not doing well today. It's not great, but I don't know that I want to overemphasize any one move. Maybe we find support where it bounced last time, 420. Under that, obviously, you got $4 and change as support. It's not good that it's below all the moving averages, but it's been so choppy that I don't treat it the same as if this was an uptrend that's been above all the MAs for 6 months and then finally breaks. So I'm going to give this the benefit of the doubt. We're already cautious because of what the equity markets are doing. I think this just reinforces that.
I agree.
But I wouldn't go crazy just because it's breaking a short-term pivot.
No, and I think you got to be looking at 4.2, and then obviously you got major support around $4. So it's going to be interesting as it navigates those two. But again, copper has held up in the face of the volatility, and it's playing a little bit of catch up the last few trading days. So it's going to be interesting to see if I kind of see copper either one, I see copper coming down to meet the volatility of oil, or I see oil recovering to come back up into the volatility of copper. And so it's going to be interesting to watch those two play that out over the next week or so. Finally, before we get into another edition of Jedi Options, which I am so excited about today, you're going to be talking a little bit about Camping World and covered calls here. Obviously, I'm doing a covered call webinar on Monday for Tackle Trading's YouTube channel, the Tackle Trading 101 series. This week's on covered calls. A week and a half ago, I did one on swing trading, and those are kind of my two. I love those topics. Swing trading is my core. Cash flow secondary, but I love covered calls. So I'm going to be doing a covered call webinar next Monday for the Tackle Trading YouTube community. You're going to be doing a covered calls on Jedi Options here today. Looking forward to that. But before we do so, let's take a quick peek at Bitcoin here. Bitcoin's been holding up in the face of the volatility. And Tyler, quite frankly, a lot better than what I would have anticipated. If you were going to tell me we were going to deal with all the headlines of the last 4 trading days, okay, both positive and negative, I would have said Bitcoin's down in that environment. Yeah. Bitcoin wasn't down in that environment. Bitcoin tried to break down, it failed, got gobbled up, and now Tyler talked me out of a 60K break here.
Listen, I'm not going to talk you out of a 60K break. I share your surprise, and the thought here is that this has been behaving somewhat as a risk asset, and it's been a risk-off environment, baby, and they've continued to gobble this up. The other thing, just real quick, and we'll come back to Bitcoin,
Ethereum's even stronger.
Stronger. So this is not unique to Bitcoin. Some of these cryptos are holding up very well. So no, I'm digging this stability, and to your point, little breakout over a round number of 60K would be the next obvious trigger to kind of confirm that bottom is in and a new upswing is beginning. And look, the market is telling you that 60K matters because we keep touching it and finding sellers there. You take them out and it's game time.
Yeah, and that's kind of how I see it as well. I am impressed with with standing up in the face of the volatility. I think you got to be impressed by that with Bitcoin. And when you see the consistency of the sell side intraday, where they just sell it every time, right? It hits that level, they sell. It hits that level, they sell. Well, what that's also telling you is if that level is broken, those algorithms start buying. Yeah, that's how they're kind of programmed. And so it's going to be interesting to see what transpires upon a breakout of 60. But the more we ding that level, the more I actually like that level, as long as support doesn't get violated here. As long as support doesn't get violated, I think it lines up that 60K break. Tyler, thank you so much for your technical thoughts here today on all the financial instruments. I'll tell you what, Tyler, I look forward to it every Wednesday. I look forward to it every Wednesday. I love charting. I'm a trained technician the same way you are, Tyler, but I'm going to tell you right now, I rely on your technical read as confirmation for my own technical read. And it also, quite frankly, many times as you're going through the markets and you're navigating the markets, you inform me of certain things that I'm not seeing as well. It helps solidify my own opinion of things. So I appreciate that, Tyler. Now we're on to another edition of one of Tackle Trading's finest tackle shorts. We love our tackle shorts. Team Tackle, do you love our tackle shorts these days? Do you love Jedi Options, Queen's Court? Do you love Fundamental Focus, these Geno Gems, Frank's charts? I don't do a lot of Matt's whiteboard in YouTube, but I did tell Christian I am doing a Matt's whiteboard for our Discord community tomorrow. So if you love the tackle shorts, make sure to give us a like and share today in YouTube. And we're bringing you another tackle short here today called Jedi Options, where Tyler breaks down an option strategy, sometimes beginner level, and quite frankly, sometimes very advanced. Love this segment. Tyler, take it away.
All right, so covered calls is the topic for today. As Matt said, we've been focusing on covered calls for the last bit here at Tackle Trading. I'm going to build a covered call on a Tackle 25 stock. This is a watch list that we have that we think are decent fundamental stocks, decent technicals that are good cash flow candidates, have good premium. And in building this out, what I want to focus on, there's lots of advantages, there's lots of perks of covered calls. I want to focus on the volatility reducing aspect of a covered call. So to set the stage here, the structure of a covered call is you're going to buy 100 shares of stock and you're going to sell one call option against it. And when you sell that call option, you're getting paid for a promise to sell your stock. Okay, you're obligating yourself to sell stock and you get paid. That payment, that premium, we often say is potential cash flow. It offers protection against a little bit of a loss in the stock. It reduces your cost basis. It makes it cheaper. The overall position is cheaper. If I buy a stock for $100 and I bring in $1 from selling a call, my net out of pocket goes from 100 to 99. And so now 99 is my break even on the position instead of 100. When you lower your cost basis like that, it increases your probability of profit. So you have a better chance of making money with a covered call than just buying stock, which is one reason we like it. So we could focus on those 4 perks if we wanted to, but the one, as I said, that I want to hit on today is the volatility reduction. I think this is pertinent and relevant and timely because of what's gone on in the market here recently. If you take a look, as you guys know, the market's a little crazy. We've had a lot of volatility. And if you're going to buy a stock and then put it in a drawer and not look at it for 10 years, you probably don't care about the volatility. I don't care how volatile it is. I'm not paying attention. I'm not just fast forwarding to the end. But most people don't do that. Most people, especially active traders, we're looking at our portfolio each day. We're monitoring the risk and the exposure. And when volatile times like what's gone on this week crop up, you get more emotional, maybe a little fear creeps in. Maybe you found that you were overexposed. So the idea of reducing the volatility, reducing the ups and the downs in a portfolio can be quite attractive in a situation like this. And that's where covered calls come in. So the best way to think about your exposure, right? Which the more exposure you have, the more volatility essentially you're going to experience, okay? I don't know that anybody who just owns 1 share of stock is all that worried this week. But if you owned 1 million shares of a stock, you're probably not having a very good experience because every day you're seeing your portfolio have massive swings. And so the number that we're going to use here for exposure is we're going to use the delta. This just tells you how much you make if the stock rises $1. Alternatively, how much you lose if the stock falls $1. So the higher your delta, the more money you make or lose. Okay. When you buy a stock, so I'm going to go long 100 shares of stock. My delta is positive 100. I make $100 if the stock goes up $1. I lose $100 if the stock goes down $1, right? So that is the degree of my fluctuation. If this is a stock that moves $3 a day, I'm probably seeing my account go up 300, down 300, up 300, down 300. Well, how could I reduce that? How could I minimize the level of fluctuation? I could sell a call. So if I sell a call option, this is a bearish trade. When you just sell calls, it's a bearish trade. You're adding a bearish trade to your stock position. Your stock position is a bullish trade. You're adding a bearish trade. And so it reduces the overall exposure. It offsets your risk. It hedges your original position. So if I sell a 40 delta call, think about what happens on an up day for a second. If the stock rises up day, stock rises $1, you make $100 on the stock. Okay. The call option will go up in value by $40, but you're short that call option. So that's a negative to you. So you would lose $40 on the call that day. So think about the overall position fluctuation. Instead it's going to go up 100, it's only going up 60, right? On a down day, by the way, you might think, oh, that sucks. I wanted to make the whole $100. Here's a key point. What you discover is in an efficient market, anything you do to suppress your downside risk, your downside volatility, will, to a certain extent, suppress how much money you can make, right? It's not really possible to simultaneously reduce risk, but have all the upside, right? So on an up day, yeah, you don't make as much on the upside, but think about a down day. On a down day, if the stock goes down $1, you lose $100 on the stock because you own 100 shares. But this 40 delta call, you're going to make $40. And so the long stock trader, their experience is plus 100, minus 100. That's how much fluctuation they had to sit through. The cover call trader's experience was plus 60, minus 60. They made $60 on the up day. They lost $60 on the down day. The key point here is not how much money they made or lost. It's the level of fluctuation they had to sit through. And so if nothing else, if for no other advantage or reason you did covered calls, I didn't say that the right way. If you didn't care about any other advantage of covered calls, just this principle alone, this ability to reduce the volatility of a position, I think is a good enough reason to explore the strategy. And I got to be honest, it gives you a sense of control that I can sell calls against stock when the market gets messy. I can immediately reduce exposure and thus lower my overall fluctuation. You don't have to essentially be at the mercy of the volatility here over the last 5, 6, 7 days. When you understand how to sell calls, you can shrink your exposure. You can reduce your overall risk. So I want to share an example of what that looks like on Camping World. Okay, I went through the Tackle 25 list. Camping World has held up quite well over the last couple of weeks. I like the long-term trend of Camping World. It's fairly stable. And the other thing that looks really good with Camping World is there's a lot of value in the call options. Camping World's a volatile enough stock to where the calls have pretty good premium. So you can build some trades that have a pretty good return on investment. Now, I don't know about the timing today based on the way that the market's going with this gap up getting sold into. Set that aside. Just focus on the principle for now. I'm going to buy this stock for, let's just call it $44. Okay, and I could leave it at that. I could just buy the stock, buy 100 shares, making dollar for dollar as it goes up and down. But if I want to shrink my exposure, I'm going to sell a call against it. Maybe I'll sell a 40 delta call. That'll cut my exposure by 40% initially. And then my experience day to day is going to be about 40% less emotional, 40% less fluctuation. And that changes with time. But initially, this is the way it works. So the traditional kind of rule for a covered call is you maybe go out about a month. And I'll tell you right now, like December monthly options, there's not really enough time. So I'm going to go to Jan. And the delta, think of this as the amount that you're reducing your volatility in percentages. If you sell an 8 delta covered call, you'll reduce the volatility of that position for the next dollar, about 8%. Not very much volatility reduction, okay? If you want to really reduce the volatility of the position, you sell a higher delta. If you want to reduce the volatility by 50%, sell a 50 delta call, right? Well, because of multiple reasons, we don't tend to immediately sell really, really high deltas because the trade-off is it caps how much money you can make in the stock. But let's say in this situation, I want kind of a nice balance between still being able to make some money in the stock, not capping my gain too quickly, but reducing the volatility by a good 40%, right? So I'm going to sell this 38 delta, I got my girl here. Hang on, baby girl, hang on. I'm going to right click. I'm going to go to buy covered stock. Okay, right? Buy covered stock. So what this will do is it'll buy the stock, sell the Jan 47 call, and I can confirm what my overall exposure is going to be. If I just right click and analyze this, take it over to the Analyze tab, I can see that my net delta here is 61. So a long stock position, 100 deltas, covered call position, 60 deltas. And so that net delta number, again, is what we use to measure the amount of volatility in the position. By selling that call, immediately reduced the exposure by 40%, about 40% or so. So, all right, I'll leave it at that. That I think is a great way of looking at covered calls through the lens of volatility exposure and delta.
Tyler, I absolutely love that. Thank you so much for a wonderful edition of Jedi Options. And covered calls are such a great way to bring in some cash flow, to compound long term, and to think long term about both growth and cash flow. But I love the take today on volatility and being able to reduce the exposure to volatility, because that is an additional benefit as well. Tyler, thank you so much. Final thoughts to you, my friend.
Yeah, look, as we're going out here, I'm going to be interested to see, Matt, do they puke all this up? Do we see a late day rally? This candle is shaping up to be not a great candle. And if you really want to feel pessimistic, go look at IWM, which gave up about 2% of gains in the last couple of hours. I think caution rules the day here. Minimizing risk over maximizing gains is my priority. And you just got to be patient. You can't force it. Sometimes we want to trade every day, but if the odds aren't there, sometimes it's just you chill and you wait for an easier pitch to swing at. This is a tough response to an up gap. I'm not surprised, but it just reinforces to me that I got to be cautious right now.
Tyler, that actually made me think of Wild Thing from Major League back in the day. Yeah, you might want to wait for a better pitch. I agree with that. Let the volatility subside. We're still seeing it in the market here today. Maybe that changes tomorrow. If it does, we'll be here to break it down with the team as well. Guys, you've been watching the Tap Trading Halftime Report for December 1st, first day of the month. Hope you guys had a good time in the report. Tyler, you are absolutely fantastic. And we will be back tomorrow. But before that, Tyler, you are taking on Frank in Trade Masters here tonight. I will be in the Discord channel in our little Trade Masters hangout, where we kind of give our internal thoughts and maybe some sarcastic comment or two.
Always expect it.
And
yes.
always with love, my friend.
Yep.
So if you want to come hang out with Tim and myself in Discord as well, we watch Trade Masters together, we'll be doing that. Tyler, you and Frank have an absolutely fantastic time breaking down Delta, Theta, and the wild card round in Trade Masters tonight as well. And until then,